Hi, welcome. It's Mary Ellen McGonagle with your Friday afternoon weekly Edge show for April 14th. Today, as usual, we're going to take a look at where the broader markets closed for the week. A bit wobbly, flat, but there is something definitely worth examining there. We also will take a look beyond the broader markets and see what's shaping up by way of sector rotation, industry groups that are moving slowly to the forefront relative to those areas that continue to remain weak. Also, I will share with you prior to the review of the markets is some of these headline news that drove price action last week, as well as relevant information and data due to be released next week as well. Last up, viewer question of the week, and this is a question from one of my trading rooms last week, and that is, what is a base breakout? I will share with you the anatomy of a base breakout, as well as a stock that is just now bullishly breaking out. So let's take a look at some of that economic data from last week. First up, a key inflation metric, March CPI data. That's the Consumer Price Index, and it did show that inflation is very gradually slowing. However, it does remain elevated. And the relevance there is that the Federal Reserve is going to potentially continue to raise rates until they see that inflation is lowering. We did also on Wednesday receive news of the Federal Reserve's latest meeting notes. And among the more impactful information was the fact that a number of FOMC officials believe that we are going to experience a mild recession later this year due to the banking crisis. And of course, that created a lot of uncertainty in the markets, and we did see a pullback on that news. Also, more inflation data. The producer price index came in later in the week, and then it too showed that inflation was slowing. So generally good news. Whether it's slowing fast enough for the Federal Reserve remains to be seen. We did get retail sales numbers for March, and they tumbled for the fourth month in a row, and that did impact certainly select areas of retail. Also, strong earnings. The earnings season did begin last week, and a number of major bank stocks came in with numbers ahead of estimates, and that did help boost the market on Friday. Next week, we will see durable goods orders released, and then first quarter GDP. That's going to be quite relevant as it relates to those that are fearing a recession. It will be important to see where that first quarter comes in relative to economic growth or contraction. Also next week, more inflation data. Core PCE data is due to be released. So let's take a look. Where did we close the week with those broader markets? And here we are, daily price chart of the S&P 500, and we can see it remains in a nice uptrend, finding support at this upward trending 10-day simple moving average. Your momentum with that RSI and the faster moving stochastics remain in positive territory. So the broader markets are still in a near-term uptrend. Beyond that, we can take a look at the underlying 11 sectors within the S&P 500. This is a 2-month daily price chart view of those sectors, and I've added a relative strength indicator. They are sorted now in descending order, and we can see up here in the forefront remain some of the more defensive areas. XLV is healthcare, XLP is consumer staples. Let's take a closer look at this healthcare sector, and we can see it reversed its downtrend the prior week, and then last week had a nice continuation rally. There was outperformance, and I'll share with you where that strength is in this healthcare area, all about helping you then be able to capitalize on that strength. From here, let's go ahead and move on. Take a look at technology. It was among the weaker sectors this week, XLK, and we can see it pulled back before experiencing a little bit of a late week rally, finding support at this upward trending 21-day simple moving average. So that uptrend does still remain in place. We're keeping an eye on that MACD, which might very well just be signaling that we are due a pause given that relative outperformance among technology, I will share some of the subgroupings there as well, so you'll be aware of what is shaping up. From here, among these weaker areas, we did see financials. They are down in this lower quartile, but they were the top performer, up 2.7%, all about earnings. Several major bank stocks coming in with good numbers. The XLF ETF gapped up on the news, entered positive territory, and we can see that MACD is poised to also close in positive territory. We're not quite out of the woods yet. However, it is primarily those bigger banks that are seeing vibrancy, while the regionals continue to falter. One other area I did want to share with you that regained its uptrend is consumer discretionary, XLY, and this is despite that weak retail sales data. We can see that the sector is now back above each of these moving averages with its momentum in positive territory, and there are select areas there that are also outperforming, and I will share that with you. So from here, let's move on and take a look at some of the other areas beyond these sectors, and these are ETFs that I find to be really helpful in staying on top of, again, really where that strength and weakness is, so that you can then, of course, capitalize. So up here in the forefront as the stronger area up here is IHI, and this is the medical devices ETF. It is a growthier area among the more defensive healthcare sector, and we can see this nice uptrend in line with the healthcare group. Some of the names there that are I would highlight are Intuitive Surgical. We can take a quick look here, but there are a number of names that are really showing this nice downtrend reversal and outperformance. From here, let's take a look at some of these other sectors that are up here in the forefront. Also in healthcare, IBB, nice continuation rally in the biotechnology ETF, and this is another area that is showing nice outperformance, certainly relative to other areas. I talked about healthcare being weak this week. One of the reasons could be this flat movement here in the semiconductors, SOXX. They pulled back very sharply here and are clinging on support at this 50-day simple moving average. Your RSI just dipping into negative territory, with the MACD experiencing a negative crossover but remaining in positive territory. This is an area I'm keeping very close watch on, because when we see a continued deterioration in semis, it is indicative of a recession fear, because semiconductors are highly cyclical. We have two very relevant companies in this group due to report next week, ASML and LRCX, Lam Research. So that could be a mover for the semis next week, one way or the other, depending on their results. Let's take a look at gold. It ended flat for the week after this gap up to a new near-term high. Uptrend remains in place near term for gold stocks. And then one other area to share with you is the fact that Brent crude oil prices, they did improve a little bit here, not much. We did see energy stocks, the second top performer last week, with energy up 2.5%. We'll just take a quick look at that here. Although the group sector chart does look constructive, I'm not seeing a whole lot of stocks within this group that are also looking constructive, with the exception of perhaps Exxon having a gap up in line with the group, trending mostly sideways since then, and then also Chevron having that gap up and entering into a little bit of an uptrend. So a couple of these mega cap names that are acting well, but otherwise not a widespread involvement or group movement there. So from here, I did talk about viewer question of the week, and it's all about base breakouts. And what I did want to share with you is the fact that my work is centered around helping investors uncover these big winning stocks that go on to far outpace the broader markets. And one common characteristic among those stocks is a base breakout before a big move. From here, I'm sharing with you a daily price chart of McDonald's, MCD. This is a stock that I added to my MEM Edge suggested holdings list back here at the end of March, and it was all about this base breakout. A base formation is when a stock hits a near-term high, pulls back, and then when it exceeds that prior high, it is viewed as a base breakout. But in addition to price movement, you also want to pay attention to momentum and volume as well. So with MCD, we did see this already positive RSI enter into a nice uptrend. We got nice volume. You want to see high volume, certainly relative to its average on that base breakout. And we also had a MACD moving average convergence divergence having a bullish crossover black line up through the red, entering into positive territory, and these characteristics acted simultaneously, thereby pushing MCD into a nice uptrend and continuation rally. So let's from here take a look. I'll share with you a stock that is exhibiting not quite similar. Each base breakout is going to have its own characteristics, but here we are with Pulte PHM, and the home builders have been really vibrant. There's good reason for that. One is the fact that we are continuing to see positive housing related data pointing to continued growth in this area. So I'm marking this chart up to highlight this potential base breakout. The stock hits a near-term high, pulls back, and is very, very close to breaking back above that recent high. Now with PHM, we already have a positive and upward trending RSI, likewise with that MACD, but we are seeing nice high volume on rally days on this particular name. And if we can get up above this prior high here, and really we're about only less than a point away on very good volume, we could easily see a nice continuation rally for PHM. That's it for this week, guys. If you haven't already, use that link below and you can trial my twice weekly MEM Edge report at a very nominal fee. Look forward to seeing you here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.